Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese. Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors. And we are back, episode 148 of Carson's Facts versus Feelings. Ryan and Sonu, and we hyped it up last week. We said we have a great technician coming on and a first-time offender, Mr. JC Parets. Before I go there, JC, honestly, I had people reaching out asking, and they were so excited. Oh my goodness, you haven't Jeff DeGraff. So no, we're not having Jeff DeGraff, everybody. I had multiple people ask me that. We got the next best thing, JC Parets. JC, how we doing?
Dude, Jeff DeGraff is the man.
I know.
He's definitely on my Mount Rushmore for sure. I'm doing great. Listen, I appreciate the invite. You know, big fan of both your work, obviously, old friends. So this is great.
Oh, yeah. No, this is fun. Yeah, the Jeff thing's pretty funny. I thought that was funny. But, I mean, let's start high level, because I'm sure a lot of people follow you. But Sonu and I have talked so much macro the last couple of weeks. We wanted to bring you on. And I'm sure people want to know, what's your take on the new Fed member, Stephen Miran, on the Fed? It's a joke. Of course he doesn't care. It's a joke. It's a joke.
They pay for the Mets.
Yeah, I don't know. Yeah. We like titles around here, and you were at All-Star Charts. You started that, but now you're at a new venture. Tell us a little bit about that, JC, and I whatever your new title is. We love titles in the world of compliance.
No, sure. So I, for many years, All-Star Charts started out as a blog back in 2010, back in the old days, in the original days of the blogosphere. And it really just gave me an outlet to be able to kind of share ideas. And I had already been writing since the great financial crisis, like keeping friends and family updated on the world falling apart, which I had a front row seat to. So that was, the great financial crisis was really when I started writing. And then we turned it into a blog. Phil Perlman built it for me, a mutual friend of ours. And, I was off and running. And then very quickly, I started getting quoted in media across the board, and, people wanting to send me money to manage. So I was like, okay. So, I had a startup hedge fund. And then, we ultimately turned All-Star Charts into a research service, right? Because the way I looked at it at the time, I'm like, listen, I'm doing all this work anyway. If nobody buys it, I still have to do it. So I was like, all right, let's see if we make an extra couple of bucks. And, boy, did we. So ultimately, I sold All-Star Charts. We were acquired in early 22, so almost 4 years ago. And I worked for an AI company for a few years, doing technical analysis, of course, still running All-Star Charts, helping teach the robots technical analysis, which, as you can imagine, that was interesting. And so that was just a great experience. And, TrendLabs, while All-Star Charts was a way to provide research for financial advisors, for hedge funds, for individual traders, and all kinds of different investors. And, All-Star Charts does all kinds of great stuff, right? Still does, thriving. TrendLabs is more me, right? TrendLabs is what I'm seeing. TrendLabs is what I'm doing with my own money. And over the years, I've really learned that, big trends, they're not coming based on fundamentals. They're based on positioning and very extremes in positioning, and really spending my days day in and day out looking for those extremes that are beginning to unwind, really has been where my heart and my brain has gone over many years of talking to the world's largest financial institutions. They have to trade this way. They need the liquidity to get in. They need the liquidity to get out. They have no other choice. So talking with these folks every day for so many years, has really trained my mind into really watching the flow of money and the positioning of where investors currently are and where they're not, and sort of skate to where the puck is going. Cubans don't know anything about hockey or ice, right? But my understanding from hockey people is that you skate to where the puck is going. Is that right?
That's the old saying.
I don't know.
So I guess we'll go with founder of TrendLabs. Is that your title?
Yeah.
Does that sound good enough? So quick story from me, and then Sonu definitely jump in. So the summer of 2012, I was at a research shop. I was in New York doing some media stuff. And I put on Twitter back in the day, said, hey, I'm in New York. And this one, I'm going to call him Kid. Hopefully you're okay with this. This kid reached out to me. I said, hey, let's go to lunch. You're in my town. And this is before you kind of like trusted people on social media. I told my wife, yeah, this guy reached out and said he wants to go to lunch. We went to this Mexican place right there. You can kind of fill me in where exactly we went. And it was you. This was June of 2012. Obviously, I don't know what you're doing in June of 2012, but now you're doing all this stuff. You bought a company, sold a company, done all this stuff. Where'd we go? Where did we eat? Was it Mad Dog or not? Where was that? The Mexican place right there on Pearl Street?
Down on Stone Street? It could have been.
Stone Street.
It could have been. Yeah. That's a random place I took you to, but I guess that makes sense because I was working down in Five at the time.
Well, it's funny because Sonu and I ate literally at that restaurant last month with Frank Capilleri. I think it's the same place you took me way back in the summer of 2012. So it's been so much fun watching you grow and learn and honestly help our industry. Clearly, a lot of financial advisors listen to this particular podcast. So it's just awesome what you've done. But I know you sent a bunch of charts. We'll probably get to the charts maybe the second half. Maybe we'll do questions then and just hit people with charts later. But excited you're here, dude. And Sonu, fire away.
No, this is awesome, dude. So great to have you. And so I actually on that, what you were just talking about, right? Flows, right? Is it right to describe technical analysis as basically flows over fundamentals and pros?
Yeah. What is it? Trend lines over headlines. Yeah. I mean, at the end of the day, in my opinion, technical analysis is the study of the behavior of the market, right? Mm-hmm. As opposed to the goods and the services in which a particular market deals, right? So if we're going to be analyzing the behavior of the market, we are by definition also analyzing the behavior of market participants, right? So that's really what we're doing here. It's a study of human behavior and understanding your own flaws, and not only overcoming your own flaws, but recognizing that all the other humans have those flaws, and almost all of them not only have not recognized that they have them, yet alone done anything about it. So we can exploit the flaws that humans have for our own selfish endeavors, which is to make money. So we look for areas where the market is the most vulnerable, where the humans are the most wrong and the most mispositioned, so that we could profit dramatically by the unwind of that positioning. More often than not, these are funds blowing up, individual accounts exploding, but that means more profits for us. So that's what we're looking for.
So you wrote a great note maybe today or yesterday. Oh, by the way, we're recording this on Friday, August 8th. By the time people listen to it, it'll be the following Wednesday. Mark Zandi over at Moody's is kind of always bearish. Maybe last name fits, or the company name fits, I'm sorry. You made a joke that as long as the economists keep being bearish, you're bullish. Nice. What's the joke about economists? Why did God create economists? To make weathermen look good? There's been a lot of bearish economists out there. Obviously, you think price pays. Talk to me how you use market sentiment, because we're going to get into tacticals, but I love sentiment, and I know you do also.
Yeah, I mean, sentiment is just how you gauge positioning, is really what it is, and mispositioning, more accurately. And the economists, what's great about the economists is that they're wrong so often, because let's understand. I don't know. I mean, you guys laugh like this is like news. Like,
I know.
This is like going on for a long time. They got some racket, these economists. So the economists are so wrong so consistently because by definition, they ignore what is actually happening in favor of things that may have happened in the past. We don't even know, because we do know
what should happen in theory in the books, right?
Yeah. Well, it may or may not have happened because we know that those numbers are going to be revised. So we actually don't know. They're not only looking at data that may or may not have happened. We don't even know if that's going to be changed in the future. In fact, it probably will. So, I mean, I can't even understand how hard their lives must be, which is no surprise. They're wrong all the time. When what are we doing? We're doing the opposite. We're focused on what is happening. I can't believe that the guys that are focused on what is happening are doing way better than the ones that are ignoring it. I can't believe it, right? So that's how I think about economists. And yeah, like it's funny, haha, but like for real though. You're like, there's a lot of money to be made. If all the economists are telling you that the world's going to fall apart, guess what? It probably is not. And if Deutsche Bank is making new all-time highs and European banks are ripping, then The market is telling you the opposite.
Maybe let's put that chart up. We do have that chart. We'll put David. We'll put the chart of the European banks, as you wrote a note on that too. European banks are up a ton. Like I said, DB's doubled. Again, let me make a preface here. JC can say what he wants. We've got all these disclosures. There's no recommendation or anything, but JC, just give us your opinion on whatever you want, because that's a disclosure. With European banks ripping, that's not bearish, right?
Historically, it is not, Ryan. I have gone back and done the work, and as it turns out, if the world is falling apart, European banks are going to be right there in the front of the line, leading the march down to zero, and Deutsche Bank is going to be waving the baton like hello. Yeah. That's what happens when the world is falling apart. When the world is not falling apart, then, these things might have a chance to do well. And not only are they doing well, Deutsche Bank doubled this year. Hello? Wow. Doubled. We're in August. Deutsche Bank doubled. So when I have the economists telling me that we're on the precipice of a recession, clearly they are not watching the stock price of a one Deutsche Bank, or Banco Santander, which is up 70% this year. And then the other one, the Bilbao Vizcaya, the other Spanish bank, up another 69%. Wow. What are these economists looking at? I don't understand.
Actually, to that point, right? Like, with the tariff news and things we've talked about that a lot as well. So it gives us something to talk about, if nothing else. But, maybe David, you can put that table of index returns. I'm looking at international returns across the board beyond Europe, right? MSCI EMU index, 28%. MSCI Korea, 44%. South Africa, now maybe that's a gold thing, 38%. Mexico is supposed to get the most hit with tariffs.
Exactly.
It's up 34%. 34%. China is up 25%. China was supposed to get hurt in the trade war, right? Taiwan, 19%. So all of this stuff is happening. And it's like, JC, I think you've mentioned before, whenever you talked about this stuff, it's a global bull market.
Yeah, that's one thing. Vietnam's up 50% this year, by the way. Not usually a safe haven, flight to safety Vietnamese stocks. Greece, you see Greece lately? Greece is only up 70% this year. So, when you see the type of activity in some of these assets, in some of these countries, I just want to reiterate that what we're looking at is a bull market, obviously, right? And when you talk about a bull market, it's not just the United States. It's not just New York or Texas. Like, we're looking at the stock market as an asset class. And so if you're getting that international confirmation from Europe, from Asia, from Latin America, and you're seeing that consistency, then that is characteristic of a healthy, broad-based bull market. And when you start to see cracks in European banks, Greece, Southeast Asia, you start to see cracks there. You'll see those cracks in certain industry groups in the United States as well, right? It shouldn't be a surprise that some of these countries are doing so well, and then the industry groups in America that are tied to that, like, why is Germany making new all-time highs all the time? You think it's because they're massive technology exposure in Germany? No, they got a ton of industrials and they got a ton of financials. And guess what's been doing great this bull market? Financials and industrials, right? So, and then, right? So look at the United States. Look at the financials making new all-time highs. Look at industrials making new all-time highs. Look at Caterpillar. Like, it's not like you're getting the same message from two different areas. So I think it's really important that when we talk about the stock market, we're not talking about the Qs. The Qs have no financials, no energy, no materials, no real estate, hardly any industrials. The Qs are not the stock market. The Qs are great. Don't get me wrong. NASDAQ 100, fantastic, great. But it's not the stock market. It's one component of it. There's nothing wrong with it, but let's just remember it's just one component. If anything, the New York Stock Exchange Composite is going to give you much better, broad-based look at the market, a lot of international exposure in the New York Stock Exchange Composite, a lot more cyclicals. But the answer is, like usual, we look at both, right?
Is breadth then, like, especially when you're just talking about U.S. breadth, right? Is that overrated, and should you just look at all of it together, like internationals especially too, right?
I don't think breadth is overrated. I believe breadth is still probably underrated, but miscalculated almost always, right? Like, I just don't arbitrarily take one number and subtract it from another number and call it market breadth. Okay. Right? Like I don't arbitrarily say, let's see how many highs there are and let's see how many lows, and then we'll subtract. And there's this magic, breadth indicator. No, that's, like we want to weigh the evidence. If we want to take a look at market breadth, then take a look at market breadth. Look at every country, not just America, not just North America, not just developed markets, every country. Are more of them going up? Are more of them going down? Are they going sideways? What's going on globally? Yeah. When you take a look at the sectors, all the sectors, the industry groups, all the industry groups, the charts, all the charts, the risk appetite ratios and different, discretionary staples, high beta, low vol, right? Like, high yield versus treasuries, like looking at these in, collectively. And at the end of the day, a client of mine many years ago, one of my first LPs in my hedge fund, as a matter of fact, you know what he told me? He says, JC, you talk about market breadth all the time, but there's no better indicator than what he called the JC breadth indicator. And what he was describing was the fact that I just sit there looking at a million charts, put on some music, have a glass of wine, and just go through 1,000 charts. Like, and, I hadn't thought of it like that, but he nailed it. And that has stuck with me. That was 2012, actually, right around the time I had lunch with Ryan. And he coined that, and that has stuck with me. And he was right. Just there's something to be said with just going chart by chart by chart. If you don't want to be like OCD like me, because I do this professionally, and you're just an investor and you are also a dentist or you're a financial advisor, you're doing other things, look at the Dow Jones Industrial Average, 30 stocks, 30. It'll take you 5 minutes. You do that once a week. There's your market breadth analysis.
That's great.
So many good things here. I did see something 30 years ago today. Coolio's Gangster Paradise came out. I could see that was a good one. I could see Sonu. Where were you in '95? Sonu, you were Middle East probably. Where were you?
I was in boarding school in India. Up in
India, you were back in India. Was that a pretty? I can see that pretty popular. Big here, big in India.
Yes, that was about the time.
I liked when the pretty girls were coming out of the trunk of the car in that music video. I was young, and I was get very excited about that.
There you go. I did set a record, guys, this morning, personal record. So I've been traveling a lot, like getting 3-4 hours of sleep. It feels like multiple days in a row. I've got a little runny nose. I sneezed 9 times in a row. I've never in my life sneezed 9 times in a row. So we like to talk about.
I do that every morning.
It's 9. You don't sneeze 9 times in a row.
I'm telling you, man. Sometimes it's like 15, 20 times.
Whoa, you're clearing that. Anyway, we like to talk about records around here. That's a record to me. You mentioned one thing about Mount Rushmore, and that got me. That was one of my questions. I mean, we'll put Jeff up there. Hopefully you've thought of this, but if you want to name 4 or 5 market technicians that I guess alive or passed on, but just you don't miss their stuff and you've read all their stuff, who would you put on your Mount Rushmore? We've got Jeff DeGraff up there. Totally agree. Who else?
Current alive. Today.
Whatever you want. Hey, let's go current alive. That's fine. Let's keep it that way. Current alive that you follow religiously right now. Yeah.
Well, you have mentors of mine that I don't follow religiously because they don't really put the work. Like guys like John Murphy. I don't read any of his work. I don't think he does any work. Rafa Campora. Luis Yamada. Like a lot of these folks are retired. We just lost Alan Shaw. Rest in peace. So those were definitely mentors to me. Contemporaries on my Mount Rushmore: DeGraff, John Roque. 100%. A lot of the things you hear me say, I learned from John Roque, even though I didn't realize it. And then he says, and I'm like, oh, that's where I got that from. John Roque, Jeff DeGraff, Ned Davis, right? Again, he's also retired. But that, a lot of influence on me there. Ari Wald, for me, one of the best in the business, no question. Yourselves, obviously, you guys do great work for sure. And then passed away. You got to go with Charlie Dow.
Okay. Oh yeah.
You got to go with one Leonardo Fibonacci de Pisa.
Yep.
And then of course you got Monehisa Homa, rice futures trader from Japan. He was so good at technical analysis. They named him an honorary samurai. So how many technicians do you know that are also a samurai?
None. Yeah.
So that's how I look at things. Yeah. I'm sure I missed somebody, but that's a great list. And I do want to point out, I followed you forever.
And what I really love about you, and I know you've worked with Phil and different, the mental side of this, you say I'm bullish or bearish, and here's why. And if it breaks, I'm not saying you outright flip, but you change your opinion quickly. And honestly, when we manage money, that's not always easy to do. But I mean, you are amazing at that. And you're like, okay, it didn't work. So what? Like, go move on. And maybe people on Twitter call you out. Well, I thought you liked small caps or didn't like them, whatever example it is. But how did you get to that point where you truly just have a process and you're okay with being wrong? Because we've all done this a long time. Like, quote unquote, we've had some really good calls on our team. We like small caps a little. We were a little overweight small caps last year or so. Clearly hadn't worked. We're now more in large over small, comfortable there. But how did you get that ability to just forget where you were wrong? And move past where you were wrong and just go forward.
And move quickly, I guess.
Move quickly. That's a good point.
Yeah, I mean, I played baseball my whole life. And, as a baseball player, if you fail 70% of the time, you get inducted into the Hall of Fame as one of the greatest that ever did it. So, like, there's probably something there. I was also a pitcher. You hit the guy. Now he's on first. Now you got another batter. Like, what are you going to do? You're just going to stop? You're going to quit? You're going to go home? No, now you got to face another guy. And maybe you hit that guy too, or walk him, or maybe he hits a home run. All of those things happen. I got back-to-back home runs hit off me at UConn. One of them was a hanging curveball. I deserved that one. Still hasn't landed. The other one was like low and away, and he just poked it out. Like, what are you going to do? That's life. Back-to-back home runs hit off me at UConn. That was a highlight of my college career. What are you going to do?
Who's the best player you ever played against that made the majors back in the day?
My junior year in high school, I pitched against David Espinoza. It was there was two men on. It was a big rivalry game, and And
this is down in Miami? Where were you?
Down in Miami, my junior year of high school. And I struck him out on a full count curveball, right? Ooh. So when my catcher, Danny, he put in the deuce, I'm like, okay, on a full count, let's go. Granted, he was a first-round draft pick, so we knew who was up, so we needed to get a little creative. So he got drafted in the first round. Boris, his agent, I was ready to tell the story, like, my grandchildren. I struck him out on a full-count curveball. But no, best player I ever played with, had all 5 tools, never made it past AAA. But what a player. The arm, the speed, the power, the average, the glove. I mean, kid was a stud, just to show you just how impossible it is to make it. But David Espinoza probably, I pitched against FIU in college. FIU was a top 15 team at the time. I shut them down pretty good too. I had a couple highlights, and then a few that still haven't landed, like I said. So,
you ever hit a guy and start a brawl? You ever get in a fight on the stage? Of course. I can see that. I can see you seem like a hothead back in the day. You're calmer now, but I can see a hothead JC hit a guy on purpose and start some ruckus.
Well, we had like growing up in Miami, playing in the hood with all these Cubans, like you had beef with different parks and different teams. So like, the other team has like JC on his second at bat right at his head. Okay.
Oh boy.
So like we would play against Tropical Park and they'd come into Glades and like, some of the guys, like I was from a nicer neighborhood, cleaner neighborhood. And, some of these other guys were more hardcore. Like I remember my center fielder, I had to hit this one guy, and the center fielder, by the time I threw the pitch, because he knew it was coming, was already standing behind me in the mound. Like he was ready. Right? And then, like, he starts walking towards me.
That's what Sonu would do for me if I hit somebody. He'd be right behind me, ready to just go throw some fisticuffs.
Manny Buigues. Shout out to Manny Buigues. He's out there listening. He always had my back.
There you go.
You still play it?
Baseball?
Yeah.
Dude, I'm coaching 4-year-old softball.
Okay. That's good. That's close enough. So should we go back to charts?
I don't know. What do you want to talk about? We're going all over the place.
Let's go about my beef, my 13-year-old beef. How old were we?
There you go.
14, 15?
Yeah.
So when was the last time you were bearish, JC, overall, broadly speaking?
Like bearish to broader markets?
Yeah.
We had some corrective times for sure. Early last year, there was some corrections. This year, you've had some tight correction, but like bigger picture, there really just hasn't been any evidence at all to support a bigger overall bearish case since the summer of 22, really. That's when breadth really started to improve. And even though some of these indexes like the NASDAQ and S&P, continued to make new lows into the fourth quarter of 22, most stocks were already heading higher. Yeah. It just wasn't the big tech stocks. And that got going in early. in early 23. So we've just continued to see consistent rotation ever since. And one day that will stop and we'll see it.
Well, I'll give you quickly some flowers. You were on with Maria, I remember October of 22, and you told her most stocks have already bottomed. They're going up. And the look she gave you was like, this guy can never come on my show again because he's wrong. But you were pointing out why we were near a major low and things weren't so bad. So, I mean, again, I want to point out to everybody listening, if you don't follow JC, he's had some incredible calls both ways, and you sure nailed. And we were there with you. I mean, we were pretty optimistic late 22 also, and we got hate for it. But congrats on,
you know how much hate I got for that,
Maria, when you said that
technicians are trend followers and you know how irresponsible it is. You know how much I got for that call.
Yeah.
Like, mind your own business, bro. Go do whatever it is that you're doing that is so boring that you have to worry about what I'm doing. Like,
I actually, on that point of trend following and momentum, I'm good. I just pulled up some numbers because trend following, I wanted to get your thoughts on why trends happen and why people sort of don't believe in them. I'm looking at the S&P 500 momentum index, right? The ETF. Year to date, it's up. We're talking about internationals, but this is the US thing. S&P 500 momentum, it's up 23%. Over the last 3 years, S&P 500 is up about 60%. The momentum index is up 115%. Last 5 years, it's up 161%. The S&P is up 108. So momentum's worked, right? Trend, whatever you call it. Why don't people believe it? Like, and then this is like, you talk about academic studies, things like that. People are showing like momentum's worked over 150 years.
Yep.
Right. And I feel like technical analysis in so many ways captures that. Mm-hmm. But why do you think people don't believe that? And it gets back to what you were talking about, behavioral biases and things like that.
Right? Humans are crazy. Humans are crazy. The humans make poor choices and act irrationally when their stress levels are elevated. And this day and age, when are human stress levels elevated the most? When there's money involved, right? So that's when the crazy comes out. So there's a lot of irrational behavior, not just ignoring math that is free, that we all have. We know that asset prices trend. We know. It is a fact. We know that momentum exists. If you ask 100 professionals in our field, friends of ours even, and even the two of you, what momentum is, you're going to get 100 different answers.
Yeah.
Right? But they'll all roughly revolve around some sort of rate of change of price, right? So it's a price derivative. So asset prices trend, we know, facts only. We know momentum exists and momentum begets more momentum. Again, we have the math, we have the data, the white papers, the PhDs. Everybody agrees. We know for a fact. We also know that relative strength exists, right? Money goes to where it's treated best. And if you've ever spoken to a portfolio manager in your life, you know why it is that money goes to where it's being treated best. So those are three pillars of the market that, to me, it starts there. Because when it comes to the market, there's a lot that we don't know, especially about the future, right? So instead of just pretending that we know all these things, why don't we just focus on the things that we do know? And we know that asset prices trend. We know that momentum exists and relative strength is real. We know that. So we start there. Why do humans pretend that that's not true? I think it's probably a combination of a lot of things. Irrational decision-making when it comes to money. Even if they did know, they just ignore it because of something else, right? Because humans are crazy. I think there's a certain level of ignorance as well from people who just don't know these three basic pillars that the three of us know intimately well.
And now our listeners too.
I'm sorry?
All our listeners too now.
Yeah. And then I just think that some people believe that they are so smart that they are somehow smarter than the market. And I know how dumb I am. And I know for a fact that I'm not smarter than the market. And I'm good with that.
Well said.
I was thinking, you said the definition of momentum, you get 10 answers from everybody. I was thinking of that. I love that. That is 100% true. I was thinking mine is momentum goes further and longer than you probably ever could expect. I mean, I've done this for a while. Once these trends get in play, they keep going. Let's talk about gold. I know you sent a chart. We've liked gold. We added gold to our tactical models in early April 2023. Obviously, we looked at it like a little bit of an alternative. What was that, Sonu?
It was March of 23 during that
March of 23
crisis, remember?
Yeah. Well, the SVB, I thought we added early April 23. Either it was March or April, but we started warming up in a big way around the SVB crisis. Gold obviously way better than bonds, thank goodness. I mean, gold seems like JC went up. It's gone sideways, and it sure looks like it wants to go up again because you can correct two ways, through price or time, as you know this. For 4 months, it's corrected through time, and I know you sent a gold chart or two. Just tell us which one you want to share, but what are you thinking about the old shiny yellow metal here?
Listen, man, we know for a fact, speaking of things that we know, we know that these commodity super cycles and gold bull markets last for a decade or two.
My definition, longer than you think.
Way longer than you think. But we've seen them all. So, like, if you're betting that was it for gold, you're betting that this is the shortest one of all time. You're the guy who likes to go with probabilities, right? So I like to also. And the probabilities are that this commodity super cycle is going to be just like those others. And it's not going to be a complete random outlier, right? And maybe it is, but there's no evidence of that yet. So just kind of bigger picture, gold, historically a leader in commodities up cycles, right? And then, so when you're looking at gold itself, we talk about it how it's a commodity, but I think it's also fair to talk about gold as a currency, right? To me, it's one of those where it's probably both, right? And so gold for many years was already making new all-time highs priced in euro, priced in British pounds, obviously priced in Japanese yen and Turkish lira and all these others.
Well,
right?
obviously. Yeah.
But you know what I mean? Like gold was making new all-time highs, priced in every currency, had already taken out those prior cycle highs from a decade and a half ago.
And I'll just jump in just for a second. JC, you were sharing this repeatedly on Twitter. So if you're not following JC on X or Twitter, you're crazy. But I mean, you were sharing this, for a long time now. Every
gold was making new all-time highs in every currency, and flip that on its head. What does that mean? That means that every currency in the world was breaking down to new all-time lows when priced in gold, or real money, if you will, right? And so the only ones left were the Swissy and the dollar. So gold still had not broken out price in Swissy or the dollar. So in other words, Swissy and the dollar had not broken down priced in gold. Okay. And then they did. And then finally, Swissy broke down relative to gold, and it was inevitable that the dollar was going to also. I mean, that was just like what? Every currency in the world is going to break to new all-time lows except in the dollar? Probably not. So sure enough, we have seen over the last year and a half, the dollar breaking down to new all-time lows when priced in real money, which is gold. And, to me, that was just inevitable. And there's no evidence that that's going to slow down or change. Gold continues to make new all-time highs priced in every currency in the world. So just like the stock market, we're looking at it globally. Gold, we're doing the same thing. We're looking at it globally.
What's neat is we manage real money, right? Tactical models and strategic models. So think tactical, 6 months to 9 months. And strategic is what, Sonu, 3 to 5 years, maybe?
3 to 5 years.
We just added some gold to our strategic models. I don't know what, Sonu, 2 or 3 weeks ago, because I thought gold got ahead of the skis this time, say in April or May. Thought it was time to consolidate, and it has. And then we added real money to gold for strategic. Sonu, you just wrote a blog. By the time people hear this, carsagroup.com/research. Let's talk about the other F word, fundamentals. Why would someone from a fundamental point of view consider some gold in a portfolio for the next 3 to 5 years?
The old fundamentals.
I think the fundamentals.
Well, Sonu looks at it the right way. Listen to this. Let's hear JC. Give him a 1 out of 10. Sonu, answer this. We'll see how he does.
Pitch me.
My fundamentals for gold is flows and demand for gold, especially. I mean,
like a technician.
Back to that. There's momentum, but let's set that aside. We talked about momentum, right, and trend. But okay, we believe that. But yeah, I just wrote like 1,500 words, right? I have to send it to Ryan to edit. Like our case for including gold is strategic perspective. I mean, I'm originally from India. I love gold. My name means gold as well.
Sonu means gold. It took me like 2 years working with the guy to learn that.
Nice. Cool? Classic Indian guy right there.
Yeah.
Classic.
There you go.
Dude,
and he hates lettuce, and he's allergic to wine. So what more do you want out of a guy,
I like gold.
Yeah. Dude, India is so much fun, man. I have more friends in Mumbai. I grew up in Miami and I lived in New York forever. I have more friends in Mumbai that'll just stop whatever they're doing and come hang out with me if I'm in town. Like seriously.
Oh, that's great. That's
beautiful
great.
people. I love Mumbai.
Yeah, and we love our gold, right? So
yeah, you do. Yeah, you guys love gold.
But no, I think the fundamental place. I think there's global demand for gold, right? I put it that way. And then as a currency hedge, right? Everyone talks about, the trade war, all of that. But if I had to make like a fundamental case, I'm writing about this. I just wrote about this, that look, if the trade deficit goes down, let's not spend too much time with that. What does that mean? We are buying less stuff from abroad. That means the rest of the world has fewer dollars. They are going to diversify into other assets as well, right? Instead of using dollars to come and buy our treasuries and our stocks and things like that, which is what happened over the last 20 years. But now they're going to be like, you know what? We have growth abroad. We have growth in Germany. We have growth maybe in Korea, Taiwan, maybe even in China, all these places. And what are they going to do with their reserve assets? They're going to buy gold. I mean, not entirely gold, but, a good portion of it. And I think gold works as that currency hedge. I mean, just from our portfolios, right? When you're thinking about our strategic portfolios, we like internationals. We moved into a neutral weight, US versus international. We were heavily overweight US coming into the year. Beginning of the year, before Liberation Day and all that, we moved to a neutral weight international. Now, the easiest ways to diversify out of the dollar is to just buy international stocks, right? But we've already done that. We want to diversify further. And gold is just a natural, for that. I mean, pretty much exactly for the reason you said, it's another currency.
Let's go. At the time we're doing this, Ethereum hit $4,000. And again, I want to preface this with, these aren't our opinions. This is JC's opinion. Ethereum 4,000, crypto. What are you thinking, JC?
Crypto's so small. Bitcoin's 2.3 trillion. Ethereum's less than half a trillion. You're looking at less than a $4 trillion total market cap in crypto. It's a rounding error at the end of the day. It's such a tiny, tiny little market. How much smaller can it get? I feel like it's got to get bigger. So, the trends are up, obviously. The rotation underneath the surface is real. Ethereum making new 6-month highs relative to Bitcoin today. Yep. You're getting rotation into tokens down the cap scale for sure. More liquidity, bigger, more people building on these blockchains every single day. Just more money, more money, more money. And as somebody who analyzes the behavior of the market and therefore market participants, I can tell you that the market participants continue to participate very heavily in these markets. And what's really fascinating is that for the first time ever, I've been trading Bitcoin since 2013.
Okay.
For the first time ever, this cycle, it's actually easier to trade and transact and participate and profit from what's happening in the crypto markets than any other cycle. In fact, I can tell you, as somebody that's been there for 12 years, every cycle in crypto gets more complicated, gets harder to trade, more difficult, more hoops to jump through just to trade on the stupid Uniswap and the this and the that. And then you got to get this wallet and then move it over here and the Phantom this and then bonk that. It makes your head spin. Now you have the TradFi markets are alive and well. You got things like Coinbase and Strategy and all these Bitcoin mining stocks, and you got Ethereum ETFs, and you got all this, and baskets of ETFs and the Galaxy, and you got options markets on all these things. You never had that before, never in any of the other cycles. You have apps like spot trading, right? Who, you could just transact like the Robinhood for meme coins, right? Where you could just trade. You don't need to go from this exchange to that exchange. I mean, so spot just makes it so easy. I mean, it's fascinating to watch as somebody who has seen it and struggled and, sent large sums of money into the metaverse and it just disappears for like a minute. And then all of a sudden it appears. It's like, oh, thank God, right? Like, you don't know. Right? Like I would send a little bit of money and see if it hits and then send the rest. Like there was all kinds of like risk management procedures that were just completely unnecessary. But I'm just paranoid because who's trying to lose $100,000 on a picture of a monkey, right? Like I'm not trying to do that. So but this is real life. And so it's just really been fascinating to watch the progression. And I don't think it's going anywhere, man. There's real money. And I got to tell you, probably 10 years ago, 8 years ago, I remember telling somebody, I'm like, it's not a real market. Institutions aren't in it. It's too small. It's too irrelevant. So it's not anything yet. You can't say that anymore. It is. They're there. Well, the institutions
we've all seen what Jamie Dimon said a few years ago to what he just said earlier this year. It's that's a 180. We've got probably 10 minutes. JC, you sent a chart of the U.S. dollar getting rejected. I think is it Mutombo who rejected it. What do you see? We'll put the chart up now. The U.S. dollar. What are you seeing there?
When we talk about this bull market and what could potentially derail, the strength and the constant rotation and the expansion internationally, to me, a stronger dollar could potentially be the catalyst to derail some of that. I mean, just, when thinking through it. So if the dollar's ripping through 100, it's probably putting some pressure on, that international outperformance, some of these, small cap growth and, some of the metals and natural resource stuff that's been working and energy. And, it can cause havoc if the Forex markets are having a heart attack and, it getting to 100 on the US dollar index and completely reversing there like the Dikembe Mutombo. No. Look how the stock markets reacted to that. I don't think that's a bad
Then you
thing.
also sent the gold buzz index. Obviously, that's gold stocks, gold miners. I mean, if the dollar rolls over, that's where you want to be, right? We can put that one up, David. The gold bug.
I think that's one of them. I think a lot of things are going to benefit from a weaker dollar. Okay. I think a lot of these international equities. I think U.S. stocks in general should do well in a weaker dollar environment. The dollar's been, pretty defensive over the last several years. And so if that money is not being defensive and is actually rolling over, similar to consumer staples relative to the S&P 500, making new all-time lows. If consumer staples continue to underperform, that's evidence of risk appetite for equities. If you start
one more, and then Sonu, let you jump in. You mentioned risk assets. I mean, it looks like everything's going up, right? Is that this big picture? How you still see it? Well, the
S&P and the Nasdaq both making new all-time highs, right? Mm-hmm. So not things you see in downtrends, right? Yep. You guys are pros. You guys have studied every downtrend in history. In most of these bear markets, are you seeing a lot of new all-time highs in those?
No, usually not.
Usually not. No, I would encourage the audience to go and check for yourself. Don't just trust us. Go and take the time to count all the all-time highs in those bear markets. It won't take you long, actually. So the Dow, don't fight Papa Dow is how I learned it, Ryan.
Long time ago. We learned that a long time ago.
Bacampora, JC, don't fight Papa Dow. You know what I used to do a lot? I used to fight Papa Dow quite a bit. I thought...
You getting fights in Miami? You getting fights on Wall Street?
I thought
fights all over the place.
Fights the charts.
In my three-piece suit, you know what I'm saying? Walking down Park Avenue with my Ferragamos. Detrick's like, what's a Ferragamo?
Can I eat it? It sounds tasty. I don't know. The food? I don't know. I've got my Burger Chef shirt on, by the way. I wear this out. I don't know if people, Burger Chef before we're all alive, but it's a famous place. I wear it. People love this shirt when I wear it out, by the way. Yeah.
You have quite the wardrobe, Mr. Detrick.
Yeah,
between the burgers,
it feels like the last day of school today for some reason. I don't know.
Yeah. Actually, JC, one thing on those charts you shared, let's put the Nikkei 225 up. How big of a deal is it that the Nikkei is broken out?
I mean, this goes back
like from 1989, right? We've been waiting for this.
And think about what was happening in 1989. The Japanese stock market was in such a bubble that this one park in Tokyo, which I've been there. It's nice, but that one park alone was worth more. The real estate in that park was worth more than the entire state of California combined. And so that's probably a little dramatic. It's probably a little extreme. And from that extreme came 30 years, 20-year bull bear market, well-deserved probably after that nonsense. And it took 36 years to finally eclipse those highs. So, what does it mean? Well, first of all, it got there about 18 months ago. So, people who were like, oh, the market doesn't have that kind of memory. There's no way there's still resistance at those levels.
You're not calling out Batnick, are you? It sounds like you and Batnick. I love hearing you two go at it. You and Batnick love to argue.
Batnick's one of those. He was like, no, there's not going to be no market memory. Okay, so it's just a coincidence that it got there in February of last year and then did nothing for a year and a half as soon as it got to those 1989 highs. And now, so listen, I think it answers the question. Yes, as it turns out, that was resistance, as it should have been. And now if we are able to make new highs and exceed those former levels, I mean, that's the market indicating, in my opinion, that we can move on. What's really interesting is that, you could buy the DXJ, which is Japan priced in local currency in yen, or you can buy the EWJ, which is Japan priced in stock in the dollar. Or you could do what our friend Todd Sone, I like his move, where you just split the difference. If you're going to buy $100 worth of Japan, you buy $50 worth of one, 50 worth of the other. Yeah. Now you're not playing Forex trader. Now you just own Japanese stocks, right? I really like that.
That's what we do. Like when in doubt, diversify it out has been our mantra for, this year, I feel.
I guess I'm too dumb to have come to that conclusion on my own. I give him so much credit. In hindsight, it's so obvious, duh. But I mean, that's the move. You don't want to play currency trader? Don't.
Yeah. Well, shout out to Todd over Strategist. So, Sonu, how you doing? You got 5 more minutes or so?
You got
a couple more minutes?
I got a couple more minutes. What do you got?
Okay. I know we're kind of at the top of the hour, our time when we did this. Sonu's going on vacation in an hour. When are you leaving for the airport, Sonu? I know you got a lot going on.
My flight's only in 3 hours, but my kids are like itching to get to the airport. They love the airport. I don't know why. I'm trying to push it away. They would have been at the airport like 2 hours ago.
The airport in Japan, the sushi at the airport in Japan is off the charts, dude. Off the charts.
Yeah.
Oh, okay.
Well, I was at your airport last night in Chicago. It was delayed. It was crazy. So I spent enough time at your airport. Have fun at your
Ryan's
airport.
in line at the popcorn line.
There you go. Episode 148 of Carson's Facts versus Feelings Talking Charts with JC Parets. If you want to hear the latest from us, don't forget to subscribe to this podcast. Please leave us a review. We love your feedback. And we have the comments open on YouTube. Do us a big favor. Go to the YouTube channel and say anything. Tell us how much you love JC. Tell us how much you hate JC. We don't care. The algorithm doesn't care. We just want comments on our YouTube channel. Sonu, maybe like one or two more. What else you want to ask JC before you go on spring break? Or not spring break, summer vacation.
Summer vacation, and actually, you mentioned nonsense in a Tokyo park, right? How do you identify nonsense like that? Like at the time, in real time, how do you know that? Like on the other side, like the economists are bearish. Everyone's calling for a recession. I feel like the economists got the cover. Maybe that's the signal that, okay, everyone's on one side, everyone's bearish, time to move, right? The contrarian signal. But on the other side, how do you identify nonsense like the Tokyo park?
Yeah, so there's two different sides, right? So when everybody's bullish, as you guys know, you guys crunch the data like I do, people tend to be bullish during bull times. You need bulls to buy stocks to have a bull market, right? So we know that. So the upside, timing the upside, too much optimism is tough. That's where market breadth comes in. That's where momentum comes in. That's where trend changes come in, right? To the downside is really where I think sentiment can be more powerful from a timing perspective, and a better consistent indicator when people are too pessimistic, which certainly was the case this spring. You had some of the most bearish readings of all time. Even, you called me out on the Maria Bartiromo interview back in October of 22, and everybody was super bearish then. It was worse this spring, Ryan.
Yeah.
True. We had, depending on how you calculate it, I mean, these people were more bearish than at the COVID lows, great financial crisis lows, dot-com bubble lows. I mean, these people were angry. And so, you love to see it. You love to see it.
No, that's great.
90% of Democrat voters thought that the market was going to go down. And just even last month, 80-something% of Democratic voters think the worst is still ahead of us. That is fantastic. The angrier, the better. Listen, it's when everybody's thrilled in a bull market and the economists are telling you about, what do they call it? They call it a Goldilocks or whatever it is they call it. Yeah. When they're telling you that, run for the hills. But when they're telling you that the world's ending, buy with both hands.
You did send us two more charts. Let's go to that. United Healthcare, again, individual recommendation, not our take. But JC, you're seeing some things that you talk about negative sentiment. What are you seeing on UNH? You sent two charts. Which one do you want to share first here?
Yeah, I mean, why don't we throw up the Elliott Wave chart? I am not an Elliott Wave guy.
I will say, before we started, we realized JC's safe word is Elliott Wave.
Yeah,
just leave it there.
Yeah. So if things are getting wild, then I say Elliott, just stop.
I won't even ask what it is.
We're gonna drop that conversation right now. I thought it was funny. Anyway, Elliott Wave with United Healthcare. What do you see?
So listen. So the three of us, we're formally trained, at market analysis and technical analysis, and we've gone through all the books and the studies. And I'm not an Elliott Wave guy. You're not going to see me counting every wave, but I know, right? I'm trained. I can't not see it. I can't not see it. It's a beautiful 5 waves down. Go back to the 1987 crash. What you're going to see? You're going to see 5 waves down. Go back to the great financial crisis from the beginning to the end, October 07 to May 2009. What you're going to see? You're going to see a nice 5 waves down, extended third wave, which is classic. And then what are we seeing here in UNH? So it just starts there. So for me, what I told you guys to do the breadth analysis and go through all 30 Dow stocks, I do the same thing. And they all look great, except for maybe Merck and UNH. Everything else looks great. So, looking at UNH, I can't help myself. I'm like, man, this thing's a disaster. Look at those 5 waves down. I can't believe it. So if we're above the wave 3 low, there's your trade, right? So for those of you who might not be familiar with the Elliott wave principle, you essentially get 3 major waves in the direction of the trend. You get 2 corrective waves, and then you start to get that reversal. That's like the lifespan of a classic trade, and that's what that is. And it doesn't mean that it needs to stop here, right? Maybe they murder the CFO. Maybe there's a complete fraud. I mean, I have no idea. I don't know anything about healthcare. I don't know the first thing about this company. What I do know is that it used to be the largest company in the world's most important index, which is the Dow Jones Industrial Average. So it was the largest component of the Dow. And now it's not even in the top 10, and it just lost $350 billion in market capitalization. And if you go to the low in United Health, the all-time low in the stock at the bottom, speaking of 1987 crash, the low in 1987, all the way to the all-time high last year, it has just retraced exactly 61.8% of that entire
David, we'll
move.
put the other chart up now. David, that's the other United Healthcare chart that has the numbers, but 61.8%. Our friend Bart showed you this, right? You said Bart showed you this one?
Yup. So I'm not a wave guy, but I got wave guys, right? I got those guys. I got a lot of different guys. I got my wave guys. So I check. I'm like, check my homework. How am I doing? How's my count? And then he goes, not only is your count spot on, it's also the 61.8% retracement of the entire move. And I'm on the phone with him. I'm like, really? He's like, yeah, I already sent you the chart. I'm like, no. So I go back. Sure enough, 61.8. So I want to give a shout out to James Bartoloni, Bart's Charts, who first taught me the Elliott wave principle almost 20 years ago. Fun fact.
Yeah.
So my point is, if United Health is going to bounce, this would be a very, very, very logical area for that bounce to happen. Now, I have no idea what's going to happen, and I want to manage my risk. So you know what I did? I bought leaps going out to 2027, December 2027, 350 calls, right? $33. And so I called Sean, and I thought Sean was going to say put on a bull call spread. Because volatility is expensive. We want to get long. We don't want to sell naked puts to finance the calls because it's UNH, and who knows what's going to happen. Like, that's on the naughty list. So we don't want to sell naked puts to finance the calls. So I figured he'd want to buy a bull call spread. He says, no, just buy the stock. It pays a 3% dividend. And I'm like, why is my options trader telling me to buy a stock for a 3% dividend? Like, that, didn't see that one coming. And he's like, I'm like, I called you for an options trade, Sean. He's like, well, what about the leaps? I'm like, now you're talking. So we got the leaps. So that's the trade. That's the trade.
So obviously Sean McLaughlin there on your team. Does he say McLaughlin or McLaughlin? How does he pronounce it?
It depends on where you are. I think he says McLaughlin, but I was in Dublin once at a pub with a bunch of technical analysts. That's the start of a great story, right? A bunch of technical analysts walk into a pub in Dublin. And they were telling me about Sean, like with their Irish accent, and they love Sean. Oh, Sean McLaughlin. Great name, you know. They love him there.
So obviously you hired Sean, you've hired a lot of people. Maybe our last question for a lot of individual investors out there, but individual advisors, right? That own their own practice, own their own business. What are some of the 2 or 3 things you've learned over multiple decades of owning companies, buying companies, selling companies, failing with companies, growing with companies? What really works, or maybe more importantly, what doesn't work when you're running a small business, JC?
Got it. So you're not talking about the stock market, actual business?
I guess I'm talking about business now. We're pulling 180 because, again, we got a lot of business owners. Yeah. So with the business, what have you learned that matters, I guess, to be successful?
Yeah, I mean, listen, I have a lot of respect for people who have started their own business. It is not easy. It's not for everybody. You know, you have ups and downs, and you have, it ends with you as the business owner, right? So if something's not getting done or something's wrong or whatever, it's on you. So I think part of the things that I've learned, the people that I see failing, we've had some successes, right? So like some of the themes that I see us doing that others don't, hire well, have smart people around you. Like, I get a lot of credit and I sound smart all the time. It's because of the people around me. It's not that I'm the smart one. The options trade I got from Sean, right? And then I called Bart. And then, we call this guy, like, I'm always learning from everybody around me. And, having that team, like, Danny Jassy, having the right technology guys, like just the right team around you, both in in this case, the stock market analysis side, like our analyst team's like crazy good, obviously. But then on the business side, behind the scenes, having the right team in place too, and letting them do their job, right? Not micromanaging them. having liquidity, having access to cash if you need it, and having, because if, you can't make payroll, that's a big problem. So I've never missed payroll once in all my years of entrepreneurship. So fortunately, I've had some connections to be able to get cash if we need it, so that's important. And then just, one day at a time is really what it is. You got good days, you got bad days, but if you could put your head down at the end of the night and did listen, I did the best I could today to move the ball down the field, and we'll get up tomorrow and move the ball down the field some more the next day. That's how I think about it.
No, that's awesome. How, last one, how can people follow you? We've kind of already said it, but what's the easiest way to follow the work you're doing, the way you're helping our industry, helping financial advisors, and helping investors out there?
TrendLabs, TrendLabs.com. Check it out. I write there every single day. I got a daily newsletter called Everybody's Wrong, where we are specifically looking for where everybody's wrong, or in my opinion, where I believe that they're wrong. And fortunately, one great thing about the market is that everybody is wrong somewhere all the time. So it's about finding where that is and exploiting that for our own selfish gains, right? And looking for opportunities to make money from the market's mispositioning. So check it out at trendlabs.com and start getting everybody's wrong every morning.
Yeah, you've quoted me a couple times over the last maybe month or so.
You're very quotable, Detrick. You know what I'm saying?
But no, I mean, obviously,
you say a lot of funny things and smart things. So
yeah, we like to have fun too. But JC, this was awesome. I knew we didn't have a ton of stuff. I knew just hit record; it'll all take care of itself. This was amazing. Thank you so much for everything you do and the way you're helping our industry. I just love how you just call people out and you're just confident. But at the same time, if you're wrong, you admit it, and I think that's rare. But that to me is what helps differentiate you from a lot of other people out there. And that and your amazing ability to know food in every city. We didn't even get there. We run out of time, but you are the expert. If I'm in some random city, I'm like, I'll just ask JC. He'll know the top restaurant in this city, and you always do. So, all right, this is, again, episode 148, Facts versus Feelings, talking charts with JC Parets. Not Jeff DeGraff, but I think this was pretty darn good. So we'll see everybody next week. Take care. Thank you.
Adios.
Thanks, JC.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.